You're listening to this week's episode of the Vacation Rental Business in Today's World podcast. You're about to start transforming your business and life with the information found here. We interview some of the greatest and most influential minds in the vacation short-term rental industry and supporting businesses. The information found here is a combination of brain science, transformational thinking, safety and loss prevention, and vacation short-term rental knowledge and experiences, all rolled into one to help you and your business to achieve levels you never thought possible. I am glad you are here, and now please welcome your host, Eric Thibodeaux.
Hello, everyone, and welcome back to the Vacation Rental in Today's World podcast. I'm Eric Thibodeaux, and I'm glad you're here. Today's podcast and all of them are sponsored by Safer VRs, where we help vacation rental owners and managers and property managers improve the safety and loss prevention of their businesses to improve their revenue and create safer stays for guests. So I'm glad you're here today, and I wanted to talk about something a little different this time. We normally have been talking about safety and basically how what I call transformational thinking in our business and how we're using that. And part of the podcast also talks about how we're dealing with or managing vacation rentals, and particularly in investing. I've been an investor in real estate since 2003. That was when we bought our first vacation rental. Since then, I've progressed quite a bit, starting in 2009 till even today in 2022, continuing to purchase cash flowing real estate, whether it's multifamily, medical office buildings. I invest passively. I create syndications, which we'll talk about. And basically, real estate, and particularly vacation rental, is my preferred vehicle of investment. Like I said, I invest in a lot of different asset classes. And in 2021 and then going into 2022, vacation rentals continue to be the most, basically the best cash flowing vehicle in real estate. Doesn't mean I don't diversify into others. I'm still looking for good investments across the board. However, whether it's office buildings, medical, multifamily here in the U.S., I also invest in certain businesses. Vacation rentals are still the best cash flowing return on the investment. And I'm going to cover some of that here today. So when we look at any real estate purchase, or I'm going to just focus on vacation rentals here, there's three primary ways, and maybe I'll introduce a fourth that's coming out about how we're looking at and purchasing property in today's world. So the first is an individual owner. Certainly I've purchased myself, or my wife and I, we have purchased vacation rentals in, basically we'll say, in our own name. And those tend to be, they can be easy to purchase. You don't have to create an entity or LLC to put them into. You have the best cash flowing opportunity because you can do a 30-year loan on these, and interest rates are super good. I recently refinanced the property we bought in 2018, and I think we paid $505,000 for it, and it just recently appraised at $770,000. So we did a cash out refinance, mainly to get my interest rate down from 5 3/8 down to, I got 3.25. So it's really a great rate. So these you can purchase in your name. They tend to, like I said, cash flow very well, and you can manage those properties yourself or have a property manager manage them on your behalf. The next one is a partnership. A partnership is where you or at least one other person, and I'll use my example of three, where three of us went in and we said, hey, we're going to buy this property. It was a condo at the beach in Orange Beach, Alabama, and we purchased it pre-construction, and we each put in the same amount of money, which I think was around $50,000-$60,000, as we bought this a few years back. And so we created an entity, and we own equal shares of that entity. All of us do various portions of work. So basically, we did not have to file for any of the exclusions under raising capital or other things I'm going to talk about next. So a partnership is another way that you can purchase a vacation rental property. One of the things here is we have been able to achieve is the loans are not as well. Let me back up and say the loans are much easier to get. I have typically provided my personal financial statement and shown proof of funds to a lender and able to secure a loan, and I can close waiting on title, but it takes about 7 to 10 days. This is not a cash purchase, this is a loan, but the amortization is 20 to 25 years. So what that means is instead of having a 30-year loan, I have a loan of 20 to 25 years, and anywhere from 5 to 7 years is the loan payment, and then it gets readjusted based upon the current interest rates, and there's caps there. So that loan is super easy to get from my perspective. I didn't have to submit tons of documentation because it's not a Freddie or Fannie Mae backed loan like you did when you were an individual. The lender is going to more than likely keep that loan in house, or they could sell it. However, if they sell it, it would have to be to someone who's not a Freddie or Fannie lender. When you purchase your personal residence or a vacation rental, you typically purchase it with a 30-year loan, maybe a 15 or 20, and those meet Fannie Mae and Freddie Mae lending guidelines. So that lender could sell that loan to another loan who's going to service that loan, and so it has to meet certain requirements. These LLC loans, where they lend to LLCs, don't necessarily have to meet those requirements. I bought a condo in that same situation. 25-year amortization, 5-year loan, 4% interest rate. Very good. I bought it back in 2019. But the partnership is a good way. Back to that, the three of us own equal ownership in the property, and we basically each do different parts to manage it in the business. And we have a 5-year loan on a 25-year amortization. So that's the second one. The third option could be a syndication. And a syndication is where an individual, and I'll just say for me, for example, I go out, I find a deal that could be purchased, and then I go out and create an entity, an LLC. I secure lending, and then I go out to potential investors. We'll call them passive investors who I've developed a relationship with and said, hey, I've identified this property. Here's some information on it, and would you like to invest in this property? If I tend to get enough yeses, then I will contact an attorney, and we will put together what's called a private placement memorandum and a subscription agreement and an operating agreement, and then we will purchase that property, and I will send that the documents out and raise capital. Okay, raising capital from others called passives, and passives are accredited investors, and there's certain guidelines around the Securities Exchange Commission for that, where they're going to say, Eric is a syndicator, I'm going to give you $50,000 or $100,000 to invest in this property, and I'm not going to take any active ownership in it or anything. You are managing the property, and I invest with you. So a syndication is where you create a structure, you raise capital from partners, which you go through some legal requirements for that. You create an operating agreement. You purchase the property on behalf of the LLC with the passive partners, and then after that, you operate it and manage it just like you would, if you were buying it yourself or through a partnership. It is an extremely beneficial way to invest in vacation rentals. I've done 4 or 5 now. I'm trying to think, probably 4. And I'll give you an example here in a minute where these have been extremely successful. And particularly if you're a passive investor. Like I said, I'm a passive investor in multifamily properties today, and I just identify uh, good syndicators, and when they produce an offering, I take a look at it. I say yes or no, and I just do the same process. So syndication is the third way. The fourth way that I'm seeing now, and we'll probably have to save for a future podcast, is where, because I'm doing some research on this, is where individuals are purchasing in the same way through a syndication. However, they're using um, cryptocurrency and basically able to purchase the investment with the crypto, and they can basically buy a percentage or share the property and then able to sell it off more quickly. So, as you can expect, when you're in any of these other properties, while real estate, whether it's individual or partnership or syndication, real estate is a good asset. However, it is illiquid. I can't say tomorrow I want to take my funds out and I need it for something. It moves very slow. You may have to sell the property if you're an individual owner. You may have to do a refinance. So it's very difficult to do this. However, in this new way that's getting looked at with cryptocurrency, is you can create fractional shares and ownership in a property and go ahead and purchase that, much like we do in the syndication side. However, your ability to sell in, let's say, 6 weeks or 6 months or 6 years is much easier. So we'll probably share more of that back on another episode as I learn more and this gets more popular out there in the market. So syndications or a fund basically is what I want to talk about and give you an example. And I'll show you the power of real estate here. So let's see, back in early 2021, we were looking for another property, and we were looking at a place in Orange Beach called Beach Village Resorts. And there was a lender, I'm sorry, there was a person who had purchased a property and was having trouble getting lending, right? This was pre construction. And basically, he was going to lose the property and probably lose his earnest money. So we were able to secure a good price below the market. I think they were selling for 479. We purchased for 458. I sent out an email and said, "Hey, fellow investors, let's purchase this property." I ran through the specifics. I got a verbal yes. I initiated an offer, and in this case, I made the offer in my name, and then later I left it able to be assignable to the LLC. We made a cash offer of 458. It was accepted, and we basically I raised the capital, created the entity, and we purchased the property. So here is a great win, right? We found a great property that we wanted. The person who was selling it was in a difficult situation, and so we were able to help that person. And then the partners and myself were able to secure a very good property. So we purchased for 458, and later at the end of 2021, the property was completed, and we spent $30,000 to furnish the property. Right, it's pre-construction. We had to furnish it with everything, and then this property was not on the beach; it was on the other side of the beach. So we said we want a beach property. So the market was very good. We listed the property for 727,000. We received an offer for 719,000. And what we did is we entered into a 1031 exchange. What this is where you can sell your property, identify up front you want to do a 1031. You also find an intermediary who's going to say they're going to receive the funds on your behalf. So you sell the property. We sold the Beach Village Resort. We entered into a contract to purchase, let's call it Phoenix 6 property for 719. The intermediary will receive those funds when we close on the Beach Village Resort property. Roughly $250,000 gain in less than a year. Now we take that intermediary has our funds, and we now purchase the Phoenix 6 property as an all cash deal. So this property, Beach Village Resort, was sold. We went into the exchange, 1031 exchange. The intermediary will hold the funds. We will then close on a cash offer for a Phoenix 6, and we will be at a beachfront property. So basically, this is how this is working. So to back up even further, I told you in my partnership that we bought back in 2018 a property. It appreciated over 250, maybe $300,000, and so it was pre-construction also. So my partners and I did a refinance because we were in a construction loan. The property was finished in February and of 2021. We did a refinance and we told the lender, hey, we want to take the cash out and use it because we're going to purchase the Beach Village Resort. They said, okay, so we got a pretty good loan on the property that we'll call Phoenix Orange Beach property. We took that refinance cash, put it into the Beach Village Resort. We pre-constructed, bought that in a separate entity. We then sold the Beach Village Resort into a 1031 exchange that is now purchasing a Phoenix 6 property. So I roughly invested, I think I $60,000 back in 2018. And my $50,000 to $60,000 investment has yielded me roughly $1.6 million in real estate. So you see the incredible opportunity that you have in real estate, and now is just a fantastic time. In the syndication, it allows you to buy a little bit larger property and move a little quicker. We also purchased in a separate group. We bought two properties, beach properties, for I think 1.6 million. Once again through an exchange. I'm sorry, not through an exchange, but through a syndication. So I'm highlighting here, and I'm sharing a lot. And I'd love to hear any questions that you have. You can go through our Safer VR's group and take a look at that and post any questions on our Facebook group. Also, it is Vacation Rental Safety. So take a look at that and let me know if you have any questions. You can always contact me. However, this investing in real estate right now is a great opportunity. Certainly, like in everything, it's all about doing the due diligence, finding the right property, doing a good review, and sometimes we're going to say no to some properties, which is okay. However, I want to highlight some different options about how you can purchase vacation rental real estate that cash flows, that has incredible opportunities for you. And I think this was something I'm hopefully that you're investing in and taking a look at. So I would appreciate if you would go to safervrs.com, sign up on my email list, look at the offerings we have. One of the offerings we have is called the Vacation Rental Academy. It's where we talk about this entire process of how do we identify, purchase, operate vacation rentals. And you could do it in any of these three options that I mentioned, as an individual, through a partnership, or through a syndication. And once you're in the syndication, you can do it as you could be the syndicator or you could be the passive. And the passive offers you great flexibility that you can own in multiple locations in different states and different markets, and you don't manage the property. And it's just a great opportunity to take a look at that. We also offer safety and loss prevention courses there in Safer VRs. That's kind of where our fundamental activities are. And then also in transformational thinking. In 2021, I became a certified neuro coach, where I'm able to work and help people identify their awesome goals that they're trying to achieve. And then what are the limiting beliefs or subconscious beliefs that are present that are holding us back? And certainly as real estate investors, I've experienced this, worked through these, and I know, and I see it a lot. Money is probably the biggest issue that individuals face, and certainly there's opportunities to work through that. Certainly, I've been through these issues, and as a certified neuro coach, can work with you to achieve these goals, identify what your limiting beliefs are, and work through that. So, Safer VRs offers quite a bit, but VR Academy is where we teach all about the real estate investing, and I look forward to hearing from you. Appreciate if you go out to uh, Apple Podcasts, give me a 5-star rating, and I hope you've enjoyed this. I'm glad you're here, and I offer you and wish you a safe day. Thanks so much. Bye-bye.
Thank you for listening to Safer VR's podcast with Eric Thibodeaux. If you enjoy this, I would love you to join my Facebook group, The Safer Vacation Rentals, for more of the same. You can also join our email list at www.safervrs.com.